Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And it is Wednesday. And yes, you know what that means. It means your favorite guest is back, Anna Kelly. How you doing, Anna?
I'm hanging in there, but I'm glad to be with you today.
Oh, thank you very much for that. The audience loves you. They appreciate everything you do for us. So thank you again for being here weekly.
Sure. My
So,
pleasure.
yeah, topic number one, you and I just have to talk about it. Zillow has thrown in the white flag. They are now no longer flippers. I believe, Anna, it's not an exaggeration to say that they will be the worst flippers of all time.
I think so. I think they've lost $20,000 per home average over, I think I read about 9,000 houses with another 9,000 in inventory that they're about to lose 20,000 up on as well.
Yeah, and there are so many takeaways from this that I just wanted to kind of rattle off. First off, you just like the dot-com crisis, you don't make up losses with volume. Remember that time frame? People were losing $1 a thing, and they said, "Don't worry, we'll make it up on volume."
Yes.
I don't really get that. So if you're losing money and you just do more of it, you're losing more money. You don't make it up on volume.
Absolutely. Absolutely. And I'm surprised that it took them this long and this many houses they were losing money on to figure that out, especially with all the data they have.
Yeah. Well, here's the deal. I think this happens a year earlier if we don't have the pandemic. They were bailed out by the best flipping market ever.
Yeah.
Between I don't know, November of last year and maybe May or June of this year. I mean, some of my experts who were flipping, we said it's the best time ever. Don't do like additions, but if you're going to do some lipstick, best time ever. No supply, crazy demand. And Zillow, if you can't make money in that environment, you're just bad.
Yeah. Yeah, it's crazy. I'd love to hear more about what happened, how they're losing so much. I think they went in and they overpaid based on data, first of all. So then they couldn't sell it because the sell side should be pretty easy if they're in markets that there's a lot of, demand versus the supply. So I would think with all their data, they would be smart enough to know what markets have more demand than supply, because that's where you're going to make the money, right? Stay out of those markets that didn't have the right supply demand dynamics. So I wonder if they bought a bunch of houses before all this hit that were in states people are leaving from. That's one thing I'd be really interested to see, kind of the dynamics and the markets they were in.
Yeah. Did
they overpay, or was the supply and demand not right on the sell side?
It's definitely the former, right? So so Zillow is definitely concentrated, right? Phoenix, Houston, Atlanta are there where they're the big buyers, right? And I have friends in Phoenix where their model was they wanted to flip to Zillow. Right. I have an example. I've talked about it a couple of times, but one of the agents there, she's pretty aggressive. She thought a house was worth $390 tops. They sent it to Zillow, and Zillow paid them, no questions asked, $417.
Wow.
And Zillow's model was, again, buy it at $417, spend X amount of dollars, and then flip it for more.
Right.
That doesn't work in a market that's not skyrocketing higher. So without question, Zillow, near as I can tell, and I've read quite a bit of articles on it in the last 24 hours, they actually use their artificial intelligence. Their model actually put in their acceleration for appreciation. I can pay a little bit more now because the house will be worth more in 4 or 5 months when we exit. That is perhaps the stupidest thing I have ever heard.
Right. That sounds crazy. Plus, you add in supply chain issues and increased costs to, rehab. If they're not making money on the buy, which is like real estate 101, right? You make money on the buy. If you're not making money on the buy and anything happens during your hold period to extend the time that you're holding it or increase the costs of your rehab, you're in trouble if you can't sell it at a certain price point. So I'm just really surprised, to be honest with you, that they've lost. I think it's on the order of $300 million.
I did the rough math because, again, I looked at Zillow a couple of different times. I think when it's all said and done, now it's really hard to tell because they're public. They're probably getting fees elsewhere from all of this, but I can't back that out because I don't know what's what, but it's actually going to be closer to 500 million when it's all said and done.
Yeah, that wouldn't surprise me. Because I think they said, and I don't remember the exact number of inventory, but $20,000 on a house.
Yeah,
and they've got at least 18,000 that they've bought.
Yeah.
So,
total. Yeah,
you know, I'm sure some of them, they've lost more money than others. And the 9,000 they're holding now, if rates start to go up, which hello, they will, right? The Fed's already said January 1, they're probably going to raise rates.
Yep.
You know, that's going to decrease demand a little bit. I bet they lose more on the next 9,000 than they did on the last 9,000.
Well, actually, let's talk about that because when you think about this now, they actually have three choices, right? They're exiting the business, so they're going to stop adding inventory. Okay, got it. One, they could just list the homes as is and sell. It's a fire sale, right? Because they're going to have some inventory that's done, some that's just bought. They're just going to be like, clear the books. You know, in that market, if you're in one of those markets, you go to a Zillow offer and you offer less, right? Because they want out, right? They are that motivated seller. This Zillow could be the banks of 2010. 2010, where like I had a model, right? They come out on Monday, I offer on Tuesday, I offer 17% less, and then we agree on 15. I mean, it worked for like a year. It's like I'm never going to offer list price because you'll take 15%, right? So Zillow could be there. I don't think they'll do that. I think what they are going to do because of the build for rent model and all of these Wall Street hedge funds and whoever, I think they're going to create a Phoenix portfolio, a Houston portfolio.
Turnkey rentals.
And then just sell them off to some Wall Street, you know, take their loss one time. It's faster. It's probably cash.
Right.
And be done.
Right.
So assuming that's the case, because again, I already can see all the YouTubes out there saying, oh, Zillow is going to cause the next housing crash, all of that. No.
Right.
The inventory will never show up for mom and pop to buy it, is my opinion. What do you think?
Yeah, I think you're right. I think they're much more likely to try to sell in volume, take their loss, take their hit, and be done with it.
Yeah.
Put more time and money into fixing them up.
Yeah, I feel fairly confident that they want this off their books in Q4, right? They're a public company, right? Every 90 days, they just declared this. They're in Q4 now, assuming they're calendar driven, which I think they are. Yeah, they want it done. They don't want any of this inventory in January. I don't think. They're going to call up Wall Street and go, okay, guys, bidding war. Here's the rate sheet, right? Here's the list. What do you got?
Right.
Yeah.
Right.
So no housing crash in Phoenix or Houston or Atlanta. I'm sorry.
No. I mean, the market's too big. There's still tons of demand in those markets, tons of demand, you know, relative to supply. And so, you know, the question is just going to be, what can they sell it at? If they've overpaid, you know, and there's other things on the market, they're probably not going to be able to sell for a profit, but they'll find buyers for the homes because of the inventory.
But again, I don't think it's even going to be, I think it'll be a buyer. And the inventory will become rentals. So if there's, because again, if Zillow did the route one, like they're going to take I'm going to make up a number, 1,100 homes in Phoenix and list all 11 homes tomorrow, that will cause a price drop. It just will. Too much inventory, same day.
Such a good point. Yeah. Such a good point.
That would hurt. They're not going to do that.
Yeah.
They're going to go to Wall Street and go, hey, I got 1,100 homes in Phoenix. Who wants them?
Absolutely.
One-time
that's
sale.
A really good point, because if you have too many houses all of a sudden on the market, you've got too much supply.
Yeah, it's a big wave. Like I own a bunch of properties in one area. If I listed everything I owned, I could move the market at least for a little bit of time.
Yeah.
Yeah. So Zillow's not doing that. And they're definitely, because the other thing you do if you list them one at a time is you just go, we're going to get rid of these over the next year. There's no chance they do that. They want this nightmare behind them.
Yes, I agree.
But here's another wrinkle. And it was actually one of my other experts on Monday. He goes by the lumberjack landlord. He's like, Mike, I don't know why they would sell these. Why don't they just become a landlord themselves? Why don't they joint venture with somebody else 50-50, 51-49 and just become landlords? And then, oh, by the way, if Goldman Sachs is right and there's a 16% appreciation, they wait a year and everything's good. They never lost anything, right? You only lose when you sell.
Right.
Why don't you become landlords? How about that?
Very interesting. I think they're probably too afraid to even try it.
Oh, they're done. Yeah, they're
after this much of a financial hit. You know, a lot of good or bad things could happen with that model. So it's very good thinking outside the box, but I doubt they'll do it.
Oh no, I've been watching public companies a long time. I've been an executive at public companies, and I can tell you there's 12 people sitting around at a desk or a conference table looking at this going, we lost how much? Stop that. Don't do that again. I guarantee you somebody said, I don't want to see these in Q1.
Right.
So then the little minions run off. They create the inventory in buckets and they go, okay, what do you guys want? Blackstone, BlackRock, American Homes, or whatever they're called. They'll be gone. But again, they're not going to crash the market because they'll never show up for us to buy.
Yeah, I agree with you completely on that point for sure. Yeah, I think they'll stick with being a tech provider,
an ad seller,
active in their, real estate.
Yeah, pretty crazy stuff. So again, folks, if you're a flipper, don't be Zillow. Don't bet on appreciation. If you're a landlord, don't bet on appreciation. Crazy stuff, right?
Absolutely nuts. Yes.
Very good. Any closing thoughts on this? And if not, how can people find you?
I think just, you make money on the buy. So, for any of us that are looking to continue to buy rentals, you can't ever overpay by, $20,000, $30,000 and think that you're going to have upside unless you're in a market that there's just that much upside, for that next level of house. You make money on the buy. It's like real estate 101. So just remember that. Yep. Yes, I can force appreciation on multis. I can make money on the sell. But if I don't make money on the buy, then I don't have any cushion left if I can't execute my business plan perfectly. So remember that. You can find me on Facebook, LinkedIn, or Instagram at Anna REI Mom Kelly or at reimom.com. And if you're interested in passive investing in apartment buildings where we make a meaningful impact on our investors and our residents, you can find me at greaterpurposecapital.com. Very cool. And the last thing I will say is Zillow could, if they wanted, prove a point that I believe in, and that is time in the market beats timing the market. So if Zillow wanted, they could just hold these and be a landlord for a couple of years and they would be just fine, but they're done. They touched the hot stove and they are out. So Anna, thank you very much. Thank you.